Good evening. This is the post-market recap by AGI Era. Today is Friday, February 20th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a broad-based rally, with all major indices closing in positive territory. The S&P 500 finished the day up 0.69%, settling at 6909.51. Technically, the index is now trading firmly above the psychological 6,900 level, a constructive sign for bulls. The Nasdaq 100 also saw strong gains, closing 0.87% higher at 2501 and 1262. The Dow Jones Industrial Average finished higher by 230.81 points, closing at 4960.25.97. Crucially, trading volume today was lighter than average, with the S&P 500 seeing approximately 2.315 billion shares traded. This lighter volume suggests that while the market moved higher, this particular rally might lack the strong institutional conviction typically associated with heavy buying. It could indicate a more cautious, retail-driven push, or simply a lack of significant catalysts to draw in larger players. Market breadth and sentiment. Under the surface, the fear gauge or VIX data was not available today. However, the overall market action suggests a relatively calm sentiment despite the lighter volume. We are seeing a clear divergence in sector performance. Money flowed noticeably into financials, XLF, which gained 0.65%, indicating a preference for value and potentially a belief in a stable economic outlook. Conversely, the energy sector, XLE, lagged significantly, closing down 0.51%. This rotation indicates that Wall Street is positioning for a more traditional economic environment, perhaps moving away from the recent commodity-driven narratives. The macro engine room. The primary driver of today's moves can be traced back to the bond market, though specific 10-year Treasury Yield data was unavailable today. Generally, movements in the 10-year Treasury Yield are significant because they directly influence borrowing costs across the economy. A rising yield, for instance, typically creates a headwind for interest rate-sensitive sectors like housing and utilities, while a falling yield can provide tailwinds. Meanwhile, the U.S. dollar index is slightly lower today, trading at 97.64, a modest dip of 0.22%. Recent market narratives have highlighted the dollar's strength, with it set for its strongest week since October on safe haven demand, driven by hawkish Federal Reserve minutes hinting at possible rate hikes. Today's slight pullback could be a minor correction after a period of strong appreciation. Crude oil is trading around 66.36, marginally lower by 0.06%, responding to a relatively stable supply-demand outlook. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day up 1.02% at 189.82. Despite recent broader market anxieties regarding the sustainability of the AI boom and intensifying competition, NVIDIA continues to show resilience. While some reports from earlier in the month highlighted investor anxiety over high valuations and potential competition, today's performance suggests a renewed, albeit cautious, appetite for the AI leader. Microsoft closed lower by 0.31%, while Apple finished higher by 1.53%. Among the other Magnificent Seven, Alphabet Google saw a significant jump, closing up 4.7% at 315.117. Amazon also posted strong gains, UP 2.59% at 210.17, and Meta was up 1.69% at 655.66. The notable strength in Alphabet, Amazon, Apple, and Meta today suggests that despite some underlying concerns about the broader AI narrative, investors are still finding compelling reasons to allocate capital to these tech giants, perhaps on individual company catalysts or a broader risk-on sentiment within the tech space. After hours and look ahead. Looking at the after-hours tape right now, we are seeing continued activity, particularly in some smaller cap names and the usual suspects among the most active tech stocks. While no single major after-hours mover has dominated headlines, the overall sentiment appears to be carrying forward some of the day's positive momentum. As we pivot to tomorrow, the economic calendar appears light for major market-moving data. Investors should specifically watch for any developing geopolitical news or shifts in commodity prices that could influence sentiment. Given that today is Friday, this wraps up a week that saw a generally positive tone despite some underlying concerns about volume and macro drivers. The key takeaway for your weekend strategy is to remain vigilant on upcoming inflation data and central bank commentary, as these will likely dictate the market's direction in the coming weeks. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. This podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.